Good morning, everybody. Welcome to the Morning Volatility Report. It is I, Andrew Giovinazzi, Chief Operating Officer of OptionPit.com, welcoming you to the Morning Volatility Report, which we actually have some of that this morning. Condors and Butterflies, Saturday class. Mark and I will give it 9:30 to around, I'm going to say, 1 o'clock Eastern Time. It's basically 4 45-minute sessions with about a 20-minute break in between the 90 minutes. But it really will help you understand how these types of positions work and how you can make money from them. Real simply, we're going to do we'll talk a lot about volatility, about realized volatility, how the positions perform. And we will have examples because we certainly will have the ability to look at some things going into Brexit. Will it be on the schedule, as Bob asked? For all Option Pit clients, if you hit schedule and hit month, it should be there already. I know everybody has to ask that, but it's there. If you cannot access it, you have to send me a note. Remember, hit monthly schedule if it's not showing up on your weekly schedule. All right? The little clicky thing on the upper left. And with that, and another note here, I like this. George Soros taking a page out of Carl Icahn's book. I bought gold. I don't like stocks. And I want you all to like my position since he's coming out and telling everybody what he's got. But I got to give the guy some credit. He was there early in the first quarter. And he's sitting on huge paper gains already. Must be getting old for that guy. Okay. He's dumping his energy that he scooped. He's buying gold, and he doesn't like China. All right. So, and let's see what the market has to say to him today. Well, they're liking gold a little bit, liking GDXJ. I mean, these are starting to these things are still moving. We'll look at XME today in our chat room. The volatility, I started poking at it a couple days ago. The vol looks relatively underpriced. We're going to try to find something in there. There is just way too much weird going on. Okay. Treasuries, despite the efforts of our fearless Fed chairman, are still going down. The German bond hit an all-time, I'm sorry, not an all-time low, but it's back at zero again. The EU continues to buy corporate bonds. It would be nice if they just stopped, but they're not. So right now we have record equity prices or close to record equity prices. But we also have bond yields at, what was this? 1.5-year lows, I believe, for the TLT. And I have to be honest with you, right? You look at this and you say, okay, we're trading, right here. Okay. Haven't seen this level ever since basically they announced the end of QE. From what I can tell, it looks like rates have only gone lower. Even though the Fed is trying to set them higher, the long end of the curve rates keep going down. I don't know. Has the Fed lost control or not? Okay. What does that mean? Look at the banks. Look at Goldman. Look at JP Morgan, right? They're smoking them again. Again, Goldman back to some of those. It's not, these are remember, this is kind of like the world's coming apart, China's falling apart, but it's kind of getting there at the low end of the range again. So again, they're starting to bake some expectations on rates again. We'll take a look at Goldman. I think we're still going to get sort of, kind of binary motion out of this whole thing. Meaning, they're going to declare something. The Brexit something's going to happen. We're going to have this little bit of back and forth. The VIX is overpricing any move we're having today. It's just The bid seems to be rising. It's not going away. But you're getting kind of this back and forth, and things are just illiquid and starting to move quite a bit. So I think what we're going to see is we're probably going to have, especially in those sensitive macro things like gold and treasuries, you're starting to see bigger moves in them, and the market is starting to think this low interest rate thing is going to stick around for just a little while longer. I mean, just again, so normally the good pattern has been to fade the types of moves. So right now they think the Fed's not going to do anything. Bank stocks are in the toilet again. Right, so we'll come up with basically come up with a trade, because it looks like what we've got is you now have kind of a range, right? Highs, so for a stock like Goldman, we have kind of the 160 is the upper band. And really, if they have more rate disappointment, it's how much farther are they really going to take it down on the rates not going down. So it looks like we're getting closer to the bottom of the ranges with the potential for the upside pop, which is the trade that we can put together in the chat room today. The same thing with TLT has had, right? The treasuries have had a huge move, right? Basically, almost off the hook. Implied volatility starting to really jump, and the 10-day volatility now, you're going to, besides this little dip, we're going to have, again, bigger moves. If it's moving 1% a day almost, we're starting to have out-of-category moves for here. So there's a lot of nervousness around this. The implied volatility has been way, way, way more expensive. So with the TLT, I think it was just trading 132 2 days ago, is now, right? And kind of now all of a sudden there's, again, more worry. So you see all these currents, and these are all just, again, worrisome currents that point to, like I said, more extreme moves in these products going back, right? If there's any disappointment, this thing is back to 127 TLT. That doesn't mean we can't set another 1-year high in the product over the next 3 or 4 days, because things are now moving sort of disconnected from apparently what the headline news is. The only thing I can see now is the Brexit worry. Everybody was kind of fading it. Now they're all of a sudden taking it seriously, right? The easiest way to see that is in the term structure for, right, the index. Where are they buying the vol, right? So now, right, the trade that we actually wrote it up in the blog yesterday, they are now taking this up more than anything. Okay, now again, all of the back end, everything is starting to move, but they are really drilling that hard. Okay, as far as they're pumping it up, I think it was 11, 12% yesterday. Now there's a 1-point move, so it's starting to look like less about what the Fed says and more about what they do in the EU, which is going to make things a little squirrely. It especially makes it squirrely for a product like treasuries that can go just about anywhere if people really start to panic. If they're pushing German bond rates to 0 again, there's panic. All right? And there's also a lack of liquidity. So that's how I'd keep your trading in mind, right? It's going to be a lot of noise, maybe short term, and then we won't see kind of the bigger macro moves until, right, sometime after the 15th, and into the 23rd and 24th. And with that, Option Bid has a normal day today. We will see you all. Also, pick up our webinar this weekend, and I will see you all in the chat shortly. Bye-bye.